And now today is a special day in Nigeria because it's the decision day for the Monetary Policy Committee meeting that started yesterday. We expect to get the full decision today, and as usual, during Business Incorporated, we'll give you the live coverage of it. So please do stay with us from 1 p.m. The studios will open until, and we'll have analysts discuss expectations and some considerations until the governor of the central bank is ready to make that announcement. So you can get it first here on Channels Television. Meanwhile, let's preempt, I guess, or some of the expectations, and we're doing that with the manager at Financial Derivatives Company, Dumebi Uduwole, right here in the studio. Hi, Dumebi. Good morning and welcome to the program.
Thank you so much, Ine. Great to be here again.
Good. So today is decision day. I don't know, is there any dissenting voice that is going to be a whole decision?
Right now, I don't think there is. Markets do expect that. And the reason is very simple. We have a lot of factors that are driving the decision that the MPC is going to make today. So we do know that exchange rate is a very big deal, a major consideration for the MPC. Growth numbers as well, inflation numbers primarily.
Inflation number is confusing these days.
So we do know the inflation trend as well, and of course, what is happening globally, right? And let's start with what's happening globally and how that will influence the interest rate decision of the MPC. Globally, we've seen a lot of uncertainty around global markets, and that's significantly impacting the commodities market, which is very, very significant to Nigeria, both on the export level and on the import level. On the export side, we have seen that oil prices are significantly lower compared to what the federal government had put in the 2025 budget at $75 per barrel, and we're seeing oil prices currently trade at $65 per barrel, and there are chances that oil price could even fall further. Right? Projections from JP Morgan are also saying that as well. The IEA is also saying that OPEC is looking towards that as well, especially because of the increase that they are planning to, put out there. So what that tells us is that the oil market is quite bearish, and the CBN has to obviously consider that because of the negative impact that would have on exchange rate expectations and investor sentiments, and how that will feed into the naira, and obviously.
Sorry, I know you want to analyze other issues, but
yes.
Do you see a situation where the budget is tweaked because of something like the oil price? Because the difference is quite much.
Yes.
And this is even an improvement that we see it at 65. We had at 50, and with the OPEC Plus increased output, that will reduce the price even further.
Yeah.
Do we see a situation where the federal government goes back to, tweak the parameters in the budget?
Yeah, of course, it's not far-fetched. We have seen that happen before now. Supplementary budgets have been created because of revenue shortfalls. So it's not far-fetched to think that that would be the case. But right now, with the kind of momentum we are seeing from the federal government and CBN, we aren't obviously seeing that they will try to explore other options. We've seen a lot of talks around non-oil export revenue, around taxation. Even the World Bank in its development report hinted at the fact that the tariffs and the importation bans and the increase in custom duties and all of that, while they might look like huge revenue generation sources at the moment, in short term, they are currently triggering inflationary pressures right now for Nigeria. So there's also the flip side of the alternative revenue sources that the federal government is exploring. And I think that there might be other conversations around debt, or raising a Eurobond, another Eurobond issuance.
Yeah, I think I heard
domestic,
something like that,
a domestic dollar bond issuance like we saw at the end of 2024. And because of investor appetite towards Nigerian economy, to an extent right now, we do think that that might be a successful one to an extent. But obviously, the decline in oil prices, the recent declining trend of FPI inflows just raise question marks on how successful that will be. But remember, the people that will be subscribing to these are more long-term investors, right? So there is the prospect that that their appetite might still be quite, fresh towards such revenue generation sources for the federal government. And the reason why I'm saying that this is a huge possibility is because deficit monetizing from the central bank will be very, very slim. The central bank has, reinstated over time the reason why they're going to remain orthodox, and such moves like ways and means advancing or deficit financing or deficit monetization will be very slim. The prospects of that happening will be very, very slim. The CBN really has done its house cleaning. We've seen net reserves significantly increase and all of that. So we don't think that that would be the case. So instead, the federal government might want to adopt more, first of all, domestic, domestic borrowing.
But I mean, the target for the fixed income market for this quarter is lower than we expected, actually.
Yes, I mean, it's not, again, like I said, it's not too far-fetched. There will be obviously some level of market, restructuring or market moves from the CBN to encourage that aspect. But again, like I mentioned, the resources available, the options available, either we have to do a Eurobond issuance to raise that revenue, or we do a domestic dollar bond issuance again. And this will be happening side by side. Bilateral conversations. We've seen the AFDB come to the table. The federal government is also in talks with the World Bank, but not exactly for a full-blown loan, because Nigeria wants to somewhat maintain that non-debt status with the IMF and to an extent with the World Bank as well. So syndicated loans, bilateral loans are things that we believe the government might want to adopt in the meantime.
Yeah, but especially even the domestic, even though it's cheaper, but it still increases our debt servicing, and that is a continental problem now, debt servicing.
I mean, yes, it is. But remember, it's not just a Nigeria problem now. But speaking on what is happening with Nigeria, debt servicing in itself, yes, it is. But we have also seen some moves towards reducing the FX overhead on that regard. So if you're paying in Naira, if you're borrowing in Naira, the chances of so much pressure being on the currency is slimmer, right? So what that means is that the pressure on the central bank, the pressure on the FX markets, the pressure on exchange rate expectations, inflation expectations, all of that, and even sovereign credit ratings will somewhat minimize. And remember, that's why I said it's going to be side by side. It wouldn't be just straight up domestic borrowing that we will see, right? Again, the government is going to try to balance it, and that's what we've seen based off of the trends that we have seen from 2024, even going into 2025, and what the CBN also has in its playbook.
So we have other factors, especially from the global space, feeding into, I don't know how much impact, although we've seen it already, the talks between Iran and the US.
Yes.
That has broken down, at least for now, and we've seen the impact on oil. US and China, they have 90 days. I wonder if we should, because we've seen China try to make some moves. The China ambassador met with our Minister of Solid Minerals, trying to make some moves within this 90 days, so that whatever happens, whatever President Trump feels like at the end of the 90 days, but I wonder how all of this will feed into our commodity and the value of our currency.
I mean, it's pretty direct in the sense that Nigeria is highly exposed to changes in the oil markets. And from everything you've mentioned so far, what that just tells us is volatility, right? So even though oil prices go down or they go up, the fact that we're seeing sharp swings in that commodity price, what that tells us is that there's going to be high volatility. And whether or not it seems in our favor or not, the goal has to be for us to look inwards to try to hedge against that. And what that looks like in practice is a significant increase in our oil production. Now is the time for us to leverage more on the volume of production, because when you look at economies of scale, there are ways for businesses or even countries now to balance things out commodity-wise. You can either leverage on a very high price, and whether you produce so much or not, you're able to still break even. Or you can leverage on high volume to sell to multiple markets.
Yeah, well, good enough. So our last production went up.
Exactly.
But
so when you look at,
we're
not just there yet. So when you see what we need to break even, what that tells us is that because oil is still a very significant commodity for Nigeria's earnings, what that tells us is that we need to ramp up production as much and sell to a diversified market. So if selling to only China, just giving an example now, is what we have been doing before, we have to look to selling to other markets, look to selling to India. If we've been selling only to European markets, we also have to look to selling to other more European markets, also sell to other, countries outside that will, Europe. So outside what we have been doing before. So that's on the oil production side. There's also the conversation that we've been having for decades long.
Diversification, I'm sure.
Of course. And the reason is because we cannot stop talking about it. Now, Nigeria is very blessed in terms of resources. I don't think we can emphasize that enough. But a model that we have seen worked in advanced markets and even emerging markets like China is the ownership of state governments towards the resources that they do own comparative advantage in. A lot of times we do wait for the center, and that's why we have seen the heavy reliance on FACT disbursements. But when state governments begin to take responsibility for the resources that they have to encourage investments into that, we will see the increase in a lot of production for these commodities.
But so,
And before we know it,
some state
exports.
governments will talk about the exclusive lists. That is also a hurdle if you talk to a whole lot of state governments. If you talk about solid minerals, for instance, I mean, businesses and individuals have to go to the center to get licenses to manage the resources that is in states. You know, so these are some of the hurdles that they have brought up, you know, that's stopping them from exploring the avenue that is abundant, you know, in resources and funding.
And I do think that, I know the last time when I came, I know I mentioned a lot about building that government trust and ensuring that we have these kinds of conversations. Because the goal is not for us to remain where we are. The definition of insanity is doing the same thing over and over again, expecting a different result. And so we have seen what it has been. We have seen the result of the center managing the resources of the entire nation. And that's why we are where we are today. So expecting a different result from that same model is just insanity. So what we need to do is change that model. And we do have templates that have succeeded in this. Malaysia is a template. Taiwan is a template. Singapore is a template. China is a template. Japan is a template.
I think that's where
politics
comes in, because we've been holding constitutional amendment. We have been holding town hall meetings and all of it. We're talking about having regions, empowering regions and subnationals. But who will let the power go? Who wants to control less territory and resources? I mean, who's ready to sacrifice that? I guess that's why we seem stuck. Even though we know what we want, we say what we want, but we cannot see what we want.
I mean, you're not wrong in that regard. Economic theory always tells us the strong interdependence and correlation and interconnectedness between the political economy and the macroeconomy. And we cannot isolate that. So I think, like the last time I know we had this conversation, and I did mention that it's extremely important to have the learned ones in places of power. It's extremely important that we have people that can execute and do the right thing for people. Remember, the people we have in authority are not supposed to be there of their own bidding, right? It's an office of service. And service to not just themselves, but service to the people. And so anything that is outside of that, what that means is that the people obviously have to be able to question all of this. Remember, the people in the places of authority are not there of their own bidding. We put them there. And we have to make sure that that they are accountable for everything that they do.
They're supposed to be voted there.
Exactly.
So they're supposed to remember those who voted them there.
Exactly.
Okay. All right, maybe. So all of this is to say there's going to be a hold, most likely a hold from the MPC. What does that translate to the micro or economy?
Level,
what does it translate?
Primarily, that looks like would go into interest rates. So first of all, look at the interest rates transmission mechanism from the monetary policy rate to the interest rates that banks would, give to business owners. So looking at the lending rate. So what that tells us is that lending rates will still remain as high as they have. And what that tells us when you break it down again is that it would affect the prices of commodities, because if business owners are still getting very high interest rates, it means that their ability to scale, their ability to employ as much people would also be slim, and the ability to produce is somewhat not capped, but it just means that the cost of their production is higher, and that will feed into prices, because oftentimes in situations like this, we do see business owners transfer the burden of their cost to consumers through higher prices. Then there's also the aspect of primarily through interest rates, that's what we're going to see. But then again, we also know that from the commodities market space, we're also seeing that there are other factors affecting, commodity prices, right? So apart from the selling price, which is the interest rate transmission mechanism, there are other factors. So for instance, seasonality right now is one of the big factors that we are seeing impact the commodities market space. Commodities like tomatoes, and their prices are really going high now because it's the planting season for those commodities. Then on the import side, you have that with the tariffs that we have, the import bans that we have, and the higher global commodity prices, it means that importation cost is also high, and that is affecting, commodity
Yeah,
prices.
I really wish that one day we'll be talking about domestic commodities and not talk about season.
Yes,
We
yes.
have, as a country, we do have the ability to have these crops all year round. If there's attention given to storage, value chain development, and all of that. We don't need to say, oh, this season there's going to be cheaper tomatoes, and
Yes.
then next season. And
Yes.
I really wish that one day we'll get out of this cycle. That would be an exciting one.
Yes, I mean, we all look forward to it because we do know what needs to be done, ensuring that we do have those storage facilities, there's farm-to-market access, the farmers are, equipped enough to, move goods and services freely and cheaper, affordable. Okay, but basically, I believe we all get the point.
Yeah,
Yes,
but the issue of security is still there. Just
yes, I was going
yesterday,
to mention
Benue
that. Yes,
still had that attack. We're not
exactly.
done with the series that we had less than a month ago. Now we have, it seems like another one, and Benue is the food basket. So of course this is going to affect.
It's going to definitely be a very big issue.
At the end of the day, we saw inflation. I don't know if you looked at the inflation from Benue State, the food inflation there, I think it was over 100%.
Yes,
and
significantly
all of that.
high.
Yeah, and this is where we're supposed to be having cheaper food.
Coming from. And you're very right about that. I think with the food security issue in Nigeria, I think the biggest question mark right now is insecurity and tackling it. And until we see significant improvements in insecurity, targeted to especially the major food producing states in Nigeria, which are residents in the north, we will continually have these kinds of, conversations. But I mean, one other thing to just kind of notice, we're also seeing, small scale businesses kind of, try to solve like the smaller issues, small but big issues that are contributing to the food security, food insecurity challenge that Nigeria is currently facing today, from cold storage to logistics, to value addition. We are seeing small businesses move in that regard to, find those niche problems and to solve them. So I think another thing to also do is support those businesses as much as possible, ensuring that they're able to scale and do a lot more. And I think another thing to do, just still leveraging that state template I mentioned, kind of supporting other states that do have some of these, commodities, ensuring that they're able to produce as much and supporting them with the right storage facilities and farm-to-market access.
Yeah, well, we do hope that there'll be that intentionality.
Yes,
yeah,
exactly.
Because we've heard it, we've seen the paper and the policies and all of that, but that implementation. But thank you so much, Dumebi, for your time and perspective this morning.
Thank you so much for having me.
All right. All right, let's take a break. It's MPC Decision Day. You get the decision when the governor of the Central Bank of Nigeria announces that that'll be during Business Incorporated later on 1 p.m. today, and Ladi will be there. So we'll see if Dumebi is right with our hold expectations. Well, she's not alone. I mean, almost all the economists I've spoken to expect there to be a hold decision by the MPC, looking at the parameters and the macro, micro, and global parameters that are playing out at this time. But let's take a break now here on Business Morning. We'll be back with another conversation. To stay with us.
It's not.